Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Newly released polling data shows that 56% of Canadians want to see the Bank of Canada focus solely on inflation and not expand its scope of things that it tries to fix. This sentiment was echoed by Doug Porter, a chief economist at the Bank of Montreal last week, when he said, "If it ain't broke, don't fix it." The Bank of Canada, for its part, has made three big moves to expand its powers and its responsibilities over the past few months, and especially over the past few weeks. So what I want to do today is go through those three big moves that the bank has made to increase its power. Then I want to go through what's wrong with this mission creep that the Bank of Canada appears to be engaging in. And then we'll do a brief review of what to look for next as the Bank of Canada attempts to sort of gain more and more influence on what it oversees over the next coming months. Speaking of what the bank has influence over, Stats Canada is set to release its inflation data this Wednesday, and that data will probably, almost definitely, have a direct impact on the pace of interest rate hikes that we're told are coming down the pipe sooner rather than later. We'll definitely have a video out on that inflation data and those interest rate hikes coming this Wednesday. So click like and subscribe to get those updates. But for now, let's get into the Bank of Canada. The first of the three major power moves by the Bank of Canada in the past few months is its expression of the need for a dual mandate. We've spoken about this in other videos. The Bank of Canada right now has a singular mandate of only keeping control of inflation. So its job is to keep inflation between 1% and 3%.
And Brownie, you're doing a heck of a job.
In contrast, other central banks like the Federal Reserve has a dual mandate, which is to keep inflation between that 1% and 3%, but also look for high unemployment. So they're supposed to implement a monetary policy that maximizes employment, so full employment. So everybody that wants a job has a job. The Bank of Canada, for its part, has been asking for and issuing reports on the necessity for those increased powers for that dual mandate. As a result, they've been allowing inflation to run hotter. They've been letting inflation run in the hope it will help our economic recovery and us get back to full employment. But the problem is that it doesn't have that mandate. The Bank of Canada's job is only inflation. And according to the poll that we talked about earlier, Canadians only want it to have that mandate.
Stay home, clip your coupons, be a happy man.
The bank's mandate is set to expire at the end of December of this year, and it's currently negotiating with the government over whether or not it will have those expanded roles. But it was actually noted just recently by CIBC that by focusing on labor market conditions, which they're expected to add to its own mandate in the next few weeks, that they are moving a step and a half or a half a step closer to having that dual mandate like the Federal Reserve has, which is all well and good, except that Canadians don't want it. 56%, as we mentioned, has said just focus on inflation. Now, I can understand the drive to have a dual mandate, just like the Federal Reserve has, as much of our two central banks do have policy coordination, and much as we tend to follow monetary policy very closely behind the Federal Reserve. I can understand the Bank of Canada wanting to have that mandate where it can closely align itself with the Fed. But the problems come when we look at the next two requests for more responsibility and power on the part of the Bank of Canada. In addition to stating their requirement for a dual mandate, the Bank of Canada has also expressed its willingness, its intention to get involved in climate change proposals and climate change action. In a statement tied to the UN's COP26 meeting, the Bank of Canada issued a statement saying that change poses significant risks to Canada's financial system and the central bank will aim to help markets price those risks, and that they'll be getting more involved in the climate change process in revising its policies and the government with its policies to help deal with climate change. Now, I'm not saying that climate change and fixing it does not require massive government attention. I'm not saying that at all. I'm saying that the Bank of Canada does not have that power and does not have that responsibility.
You have no power here.
Involved in inherent in any climate change discussion is going to be a reallocation of resources. Some will get taxed, some will get benefits. If that weren't the case, climate change would already be fixed by now. But the Bank of Canada doesn't have that mandate just to go out on its own and work on climate change. Its job right now, as it stands, is inflation. The bank's justification, and we're going to hear more of this in a few minutes, the bank's justification is that climate change is directly related to the financial security of Canada. And yes, definitely it is. But it's a government job, not a crown corporation's job, to allocate resources to climate change. But we do see the Bank of Canada trying to expand its role, expand its powers into this climate change debate. It's I can help. And we're about to see that that's echoed even more when we're looking at equality. At a recent conference of central banks, Tiff Macklem noted that the Bank of Canada will be there and plans on being there to help reduce inequality in the global economic recovery after COVID.
That entrenched inequalities that prevent some of our citizens from fully participating in labor markets not only hold them back from opportunities, but they hold the whole economy back from realizing its full potential.
So Tiff Macklem and the Bank of Canada are arguing that it is their role to help reduce inequality on the part of Canadians, in that inequality in the long run is bad for our financial progress, our financial expansion.
My own view is that we are tasked with serving our citizens, not some of our citizens.
But the criticism is that, again, similar to climate change, is that it is going well beyond its mandate and that fixing inequality is not its job. So even Tiff Macklem acknowledges that this is well beyond the Bank of Canada's mandate, but its argument is that equality will contribute to the overall financial stability of Canada, and thus it is too within the Bank of Canada's mandate. And we see a pattern here. We see it with climate change, and we see it with the equality argument with our economic recovery. Tiff Macklem seems to think that if they say, well, this helps our financial stability, our financial recovery, then it is within the bank's purview. That is an extremely, very slippery slope, as anything could be considered to be helpful to our financial stability. But so what? Why is this all a big deal? The bank wants to make sure that there's full employment through its dual mandate. It wants to help with climate change and reduce inequality. What's wrong with that? The problem is that that's not where it doesn't have that authority to do so. When COVID hit, the Bank of Canada was instrumental, definitely, in helping us get through the crisis. If you accept that the lockdowns were necessary and that people were going to need money to get through them, which I think everyone can agree that they were going to need money to get through them, the bank helped drastically lower borrowing costs for the federal government, which was definitely needed at the time. But once a bank gets this power, once any institution gets this power, mission creep tends to set in. They were extremely important during the early and even mid to final days of COVID. Now COVID's coming to an end, and they're saying, well, we can help with this, we can help with this, we can help with this. But, to quote Abraham Maslow, you've heard of Maslow's hierarchy of needs, if the only tool you carry is a hammer, all you're going to see is a nail. So when the Bank of Canada looks to help fix climate change and help reduce inequality, it's going to either throw money at a problem or take money away from a problem. That's really its two inflation fighting tools that it has. Throw money at it or take money away from it. That's really the only two solutions. Obviously, it's a little bit more complicated than that. But that's really the only two solutions that the Bank of Canada maintains. So, if they are going to try to fix climate policy and try to fix inequality, they are going to create winners and losers. They're going to redistribute goods, allocation of wealth from one group to another group, and that is not their job. They are not elected representatives. That is the representatives of Parliament. Say what you want about our governing leaders, and I'll happily join you. But they were democratically elected and do have that job to allocate resources. That is why we elect them. That's the definition of politics, who gets what and how much. The bank is supposed to be non-partisan institution which stays within its lane. It stays within its mandate. It fights inflation, and if it does get that mandate, that authorization from Parliament saying it can seek to implement full employment, then it has that power. It's gotten it from Parliament. But the bank can't unilaterally say it's going to devote resources to fight climate change or unilaterally devote resources to fight inequality, as it doesn't have that authorization. Given how much money has been printed and given how much interest rates are going to affect the distribution of wealth and the distribution of resources and all of our futures over the next coming months and years, The bank needs to have a clear mandate from our government, from our elected politicians, before it can go forward and change the rules of the game and change what it can do, how it can affect our economy. And change it definitely will, as we are told we will be getting between 2 and 8 interest rate hikes, depending on who you ask, over the next few years. And we're definitely going to have some updates on that in next week and probably the weeks thereafter. If you want to get those updates, click like and subscribe, and thanks so much for watching.